Yeah, hi, good morning guys. Mike here, Global Investments. I hope everybody's doing well today. Guys, just a very quick one today. I want to talk about something called an SRC. Now, what is an SRC? An SRC is a seller's rental credit on an investment property that we sell in the US. So, as you know, the majority of our investors are looking for a lot of different things, and some investors are different to others. So, some clients might be looking for that equity gain, buying properties way under market value, which is one of the reasons why we introduced last year our renovation projects, which are perfect for that. But what the renovation projects don't do is they don't give us that income or that cash flow from day one, because with a renovation project, you need to wait for the works to be finished, then for the property to be appraised, for the management company to place tenants, but you're getting that equity, you're getting that lump of equity, guys. So as a company, we've been looking for, or we're always looking for those tenanted properties, those cash flowing properties in areas like Cleveland and like Detroit, and sometimes they're really difficult to get. Now, let me explain why they're difficult to get. Is because some of the times we find a great house in a great location and the sellers negotiate well on the price, but the rent of the tenant is very low. Now, why would the rent be very low? The rent would be very low because maybe the tenant has been in place for 2, 3 or 4 years. So it's way under what the market rent is. So we have a situation where price is good, location is good, condition is good. So it's ticking all of the boxes. Yes, it's cash flowing, but it's not cash flowing at what we want it to cash flow because it's not at the market rent. So what we've been doing as a company is we came up with something called an SRC, which is a seller's rental credit. So what is that? We negotiate with the seller and we say to the seller, listen, we can sell your property at this price, the price that you want it for. It's a great location, great condition. However, the rent is too low. So what we're going to ask you to do as the seller is we're going to ask you to pay the difference between the current rent. So let's say the current market rent is $700 and the actual market rent is $1,200. So we're going to ask the seller to pay the difference between $700 and $1,200, which is $500, and we're going to ask him to pay that for a year. So what does that give you as the investor? That gives you guys a great house in a great location, in great condition, cash flowing, but also cash flowing for 1 year at the current market rent. Fantastic. So the big question is, Mike, okay, that's great. We love the house, we love the location, we love the condition, and it's cash flowing, perfect income from day one. It allows me to hold that property. It's something I always say. First thing you should look for is cash flow, which allows us to hold that piece of real estate through the cycles, through the property cycles, while you see that uplift or that growth, that capital appreciation in the piece of real estate. So what does it give you the opportunity to do? Well, what it does is, as you're receiving that cash flow for the first year, you can then speak to your management company, speak to the tenants and say, right, okay, listen, you're paying way under the market rent, which the tenant knows that, of course, and try and increase that rent as the year goes on. So you've got a whole year to negotiate with the tenant and increase that rent from $700, for example, up to $1,200. So it's giving you that breathing space to do that, but it's also giving you great cash flow at the current market rent. So guys, that's what an SRC is. I just wanted to give you guys a heads up on it. We're negotiating as hard as we can with these sellers because we know what a lot of clients are looking for is that cash flow, is that passive income from the day that you close on the property. And that's what this product is going to do. So keep an eye out on our PDFs. They'll be marketed with SRC. It'll be explained in the PDFs, the difference in the rent. The other thing that you could look at doing as well is, let's say, for example, the tenants can't afford to pay the rent, that uplifted rent. You could either, number one, keep them in, but again, you'd have to appreciate that the return is still low, but you're still going to see the growth on the house. Or you could give the tenants plenty of notice and say, listen, we're really sorry. At the end of the year, once the seller's rental credit is up, we'd ask you to find somewhere else, and then you get the management company to place a new tenant at the current market rent. So it's kind of bridging that gap between either increasing the rent of the tenant or replacing the tenant. So a lot of great opportunities. Again, guys, we understand people have different levels of risk. People have different needs when it comes to investments. Some people are looking for that appreciation, looking for that equity, and don't really care about the cash flow. But in terms of cash flow and equity and getting that capital appreciation over the years as the properties go through that cycle, then I think this SRC, the seller's rental credit, is something great for you guys to look at. So keep an eye out for it. If you'd like any more information on it, give myself or any one of my guys a call in the office. You guys have a great day and we'll speak soon.